Right now, behind the scenes, a revolution is gently underway, one not motivated by social media trends or buzz. It's being constructed ripple by brick. Ripple has been establishing the foundation to change the flow of money for more than 10 years. It seems as though we are only now into the deployment stage. Reliable insider reports and whispers from inside the fintech space indicate that corporations like Amazon, Walmart, and FedEx are now secretly testing and using RippleNet, the worldwide payments network run on XRP. There isn't a rumor about this. This is not theory. This is not hypothesis. Blockchain is now truly integrating into the plumbing of the entire economy. Among the few people who appreciate the scope of what is happening is you, if you are viewing this video. It's not about whether XRP might survive or acquire momentum anymore. It's about how much of the trillion-dollar payments business it ends up consuming. Today, the distinction is that we are not only referring to banks or limited remittance channels. We are discussing Fortune 500 participants, the largest corporations in the world, XRP-based testing of RippleNet's capabilities for real-time settlement. You take note when Amazon starts doing RippleNet tests. You probe further when Walmart begins performing pilot transactions on the XRP ledger. And you realize the future isn't coming when Ripple's CEO casually lets slip XRP is our currency. You realize the future isn't coming when casually gently lets slip that XRP is our money. Here it is already. Let's dissect exactly what this implies. The massive worldwide retailer Amazon handles billions of payments each month. They are under continual pressure to pay across more jurisdictions, faster, less expensively. Exactly that is provided by RippleNet. XRP is the single token driving its liquidity layer. Ripple has long claimed XRP is intended for high-volume enterprise-level settlement, and today it's being used at business scale. That serves not only as validation, that functions as an economic stimulus. Consider Walmart, the biggest store on Earth. With thousands of suppliers, vendors, and daily operating payments flowing out, they handle approximately $600 million annually. RippleNet records just 1% of total flow. Yet those payments, $6 billion, route themselves through XRP. And depending on average liquidity requirements, it would imply more than 600 million XRP coins locked up in enterprise use just from Walmart alone. Given the limited current supply, that is an amazing sum. Multiply that by other businesses likewise testing RippleNet like FedEx, which manages millions of cross-border logistics payments, and you begin to see why $1,000 per XRP no longer feels far-fetched. This is not conjecture. This is mathematical. Not from speculators is the demand. It comes from large, repetitive cash flow demanding global companies. And simple supply and demand dynamics will force prices higher when actual business money starts to flow via XRP. XRP is not printed on demand as fiat is. It has a set overall supply. As more of it finds its way into corporate payment systems, retail disappears from view. Supply shock, one of the most strong price motivators in any financial market, results. And let's review David Schwartz, the CTO of Ripple, to further support this story. In a recent interview that rocked the crypto community, Schwartz said unequivocally, "Enterprise demand calls for greater XRP values. XRP isn't liquid enough at low values to cover the scale of payments we are solving for. That has nothing to do with marketing. It is only technical, not necessary. XRP must climb if it is expected to flow billions daily via RippleNet, so that less tokens are required to cover significant transfers. The reasoning is simple, yet eloquent. XRP gets more scalable and efficient for institutional use the greater its value. But here is the chronology that counts most. December 2024 is internal development logs and project management briefings indicate that RippleNet is getting ready to release its enterprise-grade mainnet before year ends. Beta is not what this is. Living deployment is what this is. The necessary infrastructure is in place. There is mapping of the hallways. The partners have been onboarded. Right now, all it takes is turning on the switch. XRP holders thus have a limited window of opportunity, maybe 6 months at most, since once these integrations get public, the price will not rise little by bit. It will yawn. This is known in conventional banking as a revaluation event. The market fixes quickly since it understands an asset has been mispriced. Revaluations in cryptocurrencies are often explosive given the extremely liquid and globally dispersed character of the market. XRP will move aggressively, and most investors will be caught off guard when that first formal announcement lands, maybe from Walmart, Amazon, or another famous name. The odd thing is that the signs have been here for a very long time. Unlike the noisy, showy, meme-driven world of cryptomania, Ripple has always functioned quietly. Others post currency on Twitter, whereas Ripple develops business software, works with the largest names in finance and industry, and negotiates with authorities. And now, RippleNet is proving to be the fundamental infrastructure layer for worldwide money flow, whilst the rest of the market sleeps or pursues the next meme coin. You could be asking why you haven't heard about this on popular media. That was intended by design. Retailers like Walmart and Amazon do not broadcast test integrations. They work under tight confidentiality, particularly in relation to new financial technologies experimentation. Unquestionably, though, if you follow the blockchain breadcrumbs, wallet activity, developer logs, and executive remarks, Ripple is getting ready for world scope. So let us return to that 1 billion projection with 100 billion XRP as the entire supply and, less than half of that, really in active circulation. XRP would have a $50 billion completely diluted value if its price point were $1,000. Right now, that sounds rather extreme. Possibly not, but when you compare it to the current worldwide payments environment, SWIFT, CHIPS, Fedwire, and other large institutional systems taken together move, honestly, hundreds of trillions of dollars annually. Not all of that has to be replaced by XRP. Just a slice, really. Given staking structures, escrow locks, and enterprise reserves, even a 10% share of worldwide cross-border settlements